Well, it finally happened. After much speculation, Intel announced that they would be cutting their quarterly dividend 66% to 12.5 cents per share. This brings their forward-looking annual dividend to 50 cents and a current dividend yield of 1.9%. My initial investment thesis for Intel is now broken. I was wrong. In today's video, I'm going to explain the reasoning behind this dividend cut and share what I'm doing with my Intel stock.
For years, Intel technicians have been making PCs smarter. Now anyone can have all the brain power they want. What do you have inside?
My name is Zach and you should leave a like and subscribe to the channel if you enjoy the video. So what happened? Intel was once the dominant global chip company, vertically integrated across design and manufacturing. However, in the most recent decade, they missed key transitions to new product categories like mobile and fell behind in manufacturing advancement. Companies like TSMC gained the manufacturing and process edge, sparking opportunities for fabless designers like AMD to take market share from Intel. Prior Intel customers like Apple started to design chips as well, getting them manufactured by TSMC. Intel was at a crossroads. They had to choose whether to focus on design and shift production outside of the company or double down on spending to regain manufacturing leadership. When new CEO Pat Gelsinger took the helm in 2021, he chose the latter. He committed Intel to regain process leadership for not only their own design chips, but a new third-party foundry business. This would allow them to manufacture for other designers and compete with companies like TSMC. That was a bold vision and required massive long-term investment. Personally, I found this plan compelling. As of 2020, Intel was raking in profits. They had a very sustainable dividend and a strong balance sheet. I thought they would be able to fund this transition while maintaining their strong cash generation. As the stock price began to fall in early 2022, I used this as an opportunity to buy the stock for my dividend growth portfolio. My thesis was that Intel would pay a strong dividend with reliable profits as they invest for future growth. However, I proved to be wrong. In the back half of 2022 and early 2023, Intel's earnings collapsed. Their forward guidance is projecting a large loss in the following quarter. They are expected to continue this poor performance through most of 2023. Intel's largest business segment, Client Computing Group, which is primarily CPUs for PCs, is facing a terrible year. There is a chip surplus now that demand has fallen off compared to the work from home boom. This is leading to excess inventory and price cutting. On top of this, Intel's spending has gotten out of control. Capital expenditures ballooned to $20 billion in 2021 and $25 billion in 2022. 2022 free cash flow was negative $9.6 billion. This is expected to be a similar loss in 2023 and may take many years to return to prior numbers. Basically, the worst situation possible is happening to Intel. They are spending more than ever while making less than ever. It became clear that this would be a long and painful transformation. The only part of my investment thesis still intact was the dividend payment. However, as I mentioned earlier, Intel has now cut its quarterly dividend over 65% to 12.5 cents per share. This is the final straw for me as my initial thesis is now entirely broken. I was wrong. I now sold all of my Intel stock at $26.11, a 20% overall loss. I was at least able to sell it up on the day prior to the stock falling over 1% more. So why did I sell? Quite a few Intel investors are actually happy about the dividend cut as it will help Intel be able to fund their massive investment in new fabrication plants. That's true, and may be a necessary strategic decision for the company. However, not all is sunshine and rainbows. This dividend cut is a signal from Intel management that they do not expect their cash flows improving anytime soon. Their balance sheet was more than able to support their current dividend for at least a weak financial 2023. As the company has gained more foresight into the future, they obviously thought a dividend cut would be necessary. Intel may be in for a long recovery. Without that dividend, I have very little incentive to hold my shares and wait for the turnaround. On top of that, there is the very real risk of it not being a successful transition. I'm pretty optimistic about it long term, but there are clearly major obstacles. As an investor, I don't need to own the stock and can always wait until success is clear before buying back in. Plus, if 2020 2023 is as bad as expected for Intel, then there may be way better buying opportunities coming later. There are even more reasons for selling my Intel stock. For one, this is a dividend growth stock portfolio, and Intel no longer fits that framework. Two, I learned from prior mistakes with AT&T and even Disney. In 2021, I should have sold AT&T immediately after the announced dividend cut. The stock fell for the following year and still has not come close to recovering. In 2020, I probably should have sold my small stake in Disney when they suspended their dividend. However, that was clouded by COVID and other factors. Going forward in my dividend portfolio, I will be much more disciplined about selling dividend cuts and not getting caught up in these turnaround stories. It's much easier to invest in a business with a clear path to success, reliable financials, and growing dividends. I've already reinvested my Intel stock into a new company in my portfolio, Broadcom, ticker symbol AVGO. Although still a semiconductor company, Broadcom is basically the complete opposite of Intel. For one, they have reliable, high, and growing free cash flow. On top of this, they have massive dividend growth. They are a fabless company that doesn't need to invest in manufacturing advancement and can instead focus on free cash flow generation. They use this cash to pay huge dividends and invest in large acquisitions. They have a growing software business and are set to acquire VMware in the coming months. I'm currently working on a full Broadcom stock review video, which will be releasing in the coming days. Subscribe to the channel to make sure you see that. Thank you for watching Dividend Data. You can sign up for dividenddata.com to use my stock research software and join a Discord community of like-minded investors. Thanks for watching.